This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro, and today I'm going to go into the stock market. I'm going to talk about the S&P, and I'm going to start with the monthly chart and work my way down to an hourly, going through the analysis, looking at price and the trend as well as the momentum conditions. But I also want to discuss a specific trade setup that developed this week, just like last week. And it was, well, it ended up being a little bit different, but similar to last week, it's off the hourly and the 10-minute. And I think we can learn a lot, even if you're not a short-term intraday trader or something like that. You can learn some of these techniques, because I'm going to talk specifically about why I like the 2 entry rather than the 3 entry and how that happened this week. And also how it plays into a couple patterns into my book. So we're going to go through all that. I also recommend you watch the video from Tuesday, because I talk about the failure on I talk about the importance of the 18-month line. But I want you to recognize that also that can happen in any time frame. And I'm going to go through a little of that today as we talk about how the market is kind of going in a lot of different directions when you look at the different time frames. So let's go ahead and get going. I've got the spider up, and just to start out, I like to look at this monthly chart to give us wide angle lens. We failed at the 18-month last month and then turned down. Now, there hasn't been any follow through. And right now we're sitting in between these 2 lines. It's not really definitive. In fact, both of these lines are really still kind of rising. I mean, this is flattening out a little bit, but that is still rising if you were to look at it from a mathematical standpoint. And this one's clearly still rising. We have got momentum going the wrong way. Okay, you see how the MACD lines are going down, but they are above 0. So the longer term trend is up, but they're going through a corrective pattern that's taking place right now. And I mean, to me, this is just a big deal. If you go back and look, as I talk about in Tuesday's video, which I definitely recommend, all the times when we failed at this, it's definitely a cause for concern. Now, what I don't want you to get into a situation where you see that happen and you sell everything. You know, that's not the answer. We still need to do our work. We have to look at the lower time frames. It's not like we can just say every time that happens, we just want to get out. You just never know. But it is a major cause for concern for me. All right, let's look at the weekly chart. So the weekly is doing the exact opposite. Let's just go back here and look what the MACD is doing on the monthly chart is overbought and working back down towards the 0 line, right? These 2 lines are going down towards 0. And now these lines are actually moving up towards 0. So we got oversold in this time frame and we're working our way back up. We got overbought in this time frame and we've worked our way down. We bounced off the 40-month and then we failed at the 40-week. I mean, these 2 charts are doing the exact opposite things right now. So if you think this is a really good environment, you're a little crazy, I think, because this is not a good environment. We want to see confluence amongst the monthly and the weekly. Not when they're going in opposite directions. So from that standpoint, you have to be real careful here. Market could turn, and the reason why it could turn is because we broke this downtrend line, and now we're testing. And we're holding support right now. This 3,900 area is pretty good support. Now, why is it support? The reason is that we drove off the low. I talked about how strong, and it doesn't even show as well in this stock, SPY as it does in a lot of individual stocks. A lot of individual stocks drove off their lows. And so as we've pulled back, they've pulled back really hard. They've dropped for 3 straight weeks, but they're still making a higher bottom. So we've had a very rough period, but we're still above support. So I think you have to factor that in. The other thing that I would factor in is the fact that there are a whole lot of these pinch plays developing. We've got lower high, and now the potential for another lower high, or we take out this peak prior week's high, and that forms the pinch play trigger. Now, when we look at this as a pinch play, it's sitting right underneath the 18-week right now. It's not ideal, right? But it is the 2 after breaking the trend line and we're coming back to test. Now, the real problem comes when we start to look at it on this time frame, because now we're below the 18 here. We've even created a little overrun now on the MACD. It's overrunning the zero line a little bit, sign of a little bit of weakness. One thing I'll point out is failure at the 18, continuation, right? And then success holding the 18 and then continuation. And then failure at the 18, and we've had a move to the downside. But we don't have anything definitive in terms of follow through. But if this were to rally up and fail at this line, I think that that would probably get all these timeframes kind of in gear together, because by the time that happens, this line might be rolling over a little bit more. This might have made a little bit of a lower high and then turned back down through its 18. And this might have moved up a little bit closer to the zero line. So we have to keep all of this as a possibility. The other possibility is that we don't fail coming up here. We come driving up through because this was a really good move off the low, because we pulled back and held support. Maybe we get a really strong move here that drives through this 18. Now, if that happens, now we're going to have all these different time frames telling us different things. We've got resistance up here at 4,300, probably works up to about 4,400. Big problem area there. We've got support underneath. And then here we'll have support and resistance in place. So, how do you handle all this? Well, I mean, I think the answer is you play with less capital if you're a trader. Certainly if you're swing trading, you got to be really careful, because we want to have confluence amongst a couple of time frames when you're swing trading. Potentially, we want the weekly and the daily. And right now, the weekly looks like it wants to rally, but this is not in a good position. This is actually rallying counter to the 18. So we need to have at least two time frames together, and we don't have that right now. These are kind of going in the opposite directions. These are going in the opposite directions somewhat, mainly because of the way this is pulled back and this is rallying. And then if we go and look at the hourly chart, we've got some improvement taking place. I mean, we're breaking the downtrend line here. If I draw in, I've got a downtrend line in place. Now, I could have drawn this one in and used that, and then this was more of a test, and now we're trying to create the 3. But I'm going to show you on the 10-minute how this really kind of looks. But let's just look at what's taken place. I've talked about the divergence that took place from here to here, and we had divergence here, and we had a lower peak here in red DI. So that was sort of the sign, and we started to get a turn. Now, it didn't last very long, and we sold off again. And this time we came down and undercut this low. So this is a lot different than a divergence. You see how this moved down like that? It made a pretty dramatic new low, and this made a higher low. It is divergence, but I like this one better. You see how this moved up and then just undercut the bottoms? It's not really like a whole new follow through to the downside. It just undercut. And yet we had pretty significant improvement in MACD during this period. So this is divergence, but this is divergence with this, but I think this one is way better. I like this way better. This is the type of divergence I want to be on the lookout for, because I know that when you just barely undercut like that and you get lots of improvement, the momentum is turning up. And we don't really what we're doing is we're kind of shaking out weak holders here, but we're not really turning the trend significantly lower with any strength anyway. Now, there's nothing going on from a DI line standpoint. These lines have caused the ADX line to drop. So I'm sort of questioning how much power is behind this right now. Okay. Now, MACD is getting back through the zero line. So if I switch this back so we can see, we are probably, just based on how this is playing out, what the hourly is doing. You see how this rallied up and it's kind of pausing, working sideways, and it's caused the zero lines to cross over, the MACD lines to cross over zero. I'm of the opinion that what probably wants to follow through a little bit more, and I bet this wants to meet up with the 18-day. Is it going to get through there? That's where it becomes a bigger question, and I don't like what I'm seeing so far in green DI. I mean, if we had better green DI on this move up, I would be considering taking this as a buy signal, but it hasn't really allowed us to do that. Now, what it has allowed us to do is to play divergence patterns. We had a divergence here. We could have played off a 10-minute, and now we got another one. And I want to show you what happened here. In fact, let's just pull up the 10-minute chart underneath. So we had a divergence take place, and I'm going to just show you on this program here. There's the divergence. So that's showing up on the 10-minute where that's taking place. Now, when we get down to this level, we've got a trend line break here, and we rally up, and then we come back down and test. So the 3 is coming up through here. All right, hopefully this is clear. So we break the downtrend line, that's the 1. And then we come back and test, and that's the 2. Now, I like to buy as 2 is lifting off and not necessarily waiting for breaking above this peak here. And the reason is because I'm doing it because I like the divergence taking place here. Okay, and so I'm looking for the first instance on this time frame that gives me an entry. So let me just zero in on this a little bit better. So I have the downtrend line break. I've got a test. I'm turning up, but if you notice, I've already got divergence on one time frame that's below the moving average. I really don't want to do this trade when this is still declining. The 18 is still declining. So we've got a pinch play that developed, but the moving average was declining. Now, we got another pinch play as it was trying to kind of cup around, but it still wasn't that definitive. So this was a little bit better pinch play, and you could have taken it and you wouldn't have been stopped out. But I think in this instance, when you're playing with divergence, let me just clear this off, is when you are dealing with divergence patterns, wait for a little bit better signal here. You see how we had a rising moving average line? And this was actually, the MACD was actually above the 0 line at this point. Now, we didn't have a green DI confirming like we did in this trade back here. Do you see this trade? We had pinch and we had green DI turning around. But what we had that was even better was the hourly chart. The hourly divergence pattern was better than this, as I've already stated. I don't like this divergence as much as this divergence. And so I'm willing to play this, and I'm willing to play it a little bit more aggressively. I'm not going to necessarily wait for this signal. Now, there's nothing wrong for waiting with this. This is the pinch with green DI holding. Okay, that's a good signal. I mean, we got great follow through. If you got in that at noon, you could have been done by the end of the day with a really nice gain. But I'm just telling you the way I look at it when I'm playing the higher time frame trend or the reversal, I'm usually looking for that first sign of a legitimate turnaround. And if I'm looking at a pinch play, I want to make sure that the moving average is rising if I'm playing a divergence on the higher time frame. All right, this is one of the patterns in my book, the 2 time frame pinch play, and the higher time frame in this instance happens to be a divergence, but I talk about that in the book. Now, notice what happened here on the 10-minute as well. We had a move up and then a pretty harsh decline, but this made a reverse divergence pattern right at the 0 line. So we're just kind of walking sideways here above 0 with low ADX. I'm sort of inclined to think that this wants to carry to the upside a little bit more right now. And that agrees with what I'm seeing on the hourly chart crossing above the 0 line on this time frame. And then it also agrees with the fact that we're bouncing off support, and it looks like we want to get up closer to the 18 on the daily chart. Now, beyond that, I'm not really feeling all that excited. I think there's too many, as I've stated, with the problems with the monthly chart, the fact that this had a lot of overrun to the downside. We're still below the 0 line on this time frame. It's not really very bullish. And also, red DI is still in command on the weekly ADX. So still some issues at hand. Hopefully I gave you some ideas on how to use these smaller time frames. This is the type of environment where you got to do that. Until we get confluence amongst some of the bigger time frames, I think you got to be a little bit more nimble with what you're doing. All right, go ahead and post any questions or comments. We'll see you next time.